you're running on the treadmill or you're driving right now, don't pull out your turn just yet. But as soon as you get to a stable position, do so. Look at line 13 and see what that number is. That number should be roughly 20% of your qualified business income.
This podcast is for informational purposes only and does not constitute financial, legal, or investment advice. Please consult a professional advisor before making decisions based on what you hear on this show.
Welcome into the Financial Freedom Roundtable. I am going to be one of your hosts, Russ Morgan. Today, we're going to talk about how to unlock the largest expense that you have. And shocking or not shocking, it's on your tax return. So I don't know about you. I don't care about reducing my latte budget, but I do care about how much money we're spending in taxes. And we know that to become financially free, our passive income has to exceed our monthly expenses. So let me introduce you to my co-host, my partner, the Italian Stallion, Mr. Joey Murray. Stallion, good afternoon.
What's up, my brother? Glad to be with you.
I got a little bit of a raspy voice today, and maybe it's just because I'm so fired up that we're talking about how do we get back for ourselves and for the person listening more money. But for you, why do you think understanding the tax return is such a missing link for people?
First of all, let me just say this. If you're like me, you have a long way to go to learning exactly what we're going to talk about today. But taxes are your single biggest expense in your lifetime. Okay. This is bigger than rent, mortgage, college, fill in the blank, whatever you think is the biggest, this surpasses it by a mile. And if you don't know how to reduce them, then it's keeping you from fueling your financial freedom. Like we could break down the passive income operating system, Russ, and on that right-hand side, but we've now got money at work and it's growing, creating passive income. The one biggest hurdle is that tax return. And so that's what we really need to dive into today is understanding it and owning it.
How many summers do you have left with your kids? 10, maybe less?
And are you spending them together or are you still stuck in the office while time slips by?
You want freedom. That's not the problem. The problem is you don't have a system that buys back your time. Without it, 3 years from now, your kids will be older and they won't care that your business was more successful. They'll remember you weren't there.
That's why we built the passive income operating system, the plan we use to create over $50,000 a month in passive income. The system isn't free, but the training that shows you how it works is, and it's under an hour.
Go to wealthwithoutwallstreet.com/PIOS. Take the first step to buying back your time now. Tribe, you know, Joey and I have been doing a lot of research on taxes, but we are definitely not qualified to give you tax advice. That's why we brought back the pocket protector flexor, Mr. Anthony Fatso. Good to have you back in, my friend. I don't see your visor today, but good to have you.
You know, instead I wore my passive income is greater than me shirt, but my pocket protector, you know, is in my safe.
Yeah, I got it. Well, as a CPA, someone used to do tax returns. Why don't most tax professionals help clients strategically read these returns?
Russ, very simple. Clients are not demanding it. All the client says, hey, here's my stuff. Give me the tax return. And CPAs, to be honest, are so overwhelmed. There's some people, and I have some people probably definitely on this podcast and people listen to this podcast are waiting until the last minute to file their taxes. So they are overwhelmed. So they don't have the capacity. But the bottom line is you need to demand that service from your CPA. And if you're not demanding it, they're not going to provide it.
Right. It's the kind of the squeaky wheel gets the grease, if you will. I mean, that's the idea. We were just having a conversation about that very thing in another piece of our business. And we were kind of frustrated that this one thing wasn't being handled. And as we've really talked it out, it's like, well, how often are you having a conversation with the person leading that very thing? And we're like, we don't. And they're like, well, so they just assume that everything is good. Right? Like if you're not asking, then they've got other people who are asking. They're going to take the time to spend with them instead of you. I think that's why this is so important, is that as business owners, we are the CEO and we have to be able to inspect what we expect at our companies. As investors, we're all investors, right? Whenever you go meet somebody at a party, you're no longer an architect, you're no longer a CPA, you're no longer an engineer, or pilot. You're an investor, because when you say to the world, I'm an investor, what are you going to get coming back to you? Investment opportunities. And the way we get better as investors is that we actually get to see more deals. We get to not necessarily do more deals, but we see more deals that helps us grow. So as somebody who is leading as the CEO of your finances and the CEO of your taxes, you need to be able to lead your tax professionals. So this is a very important part for us to get right. All right, Stallion, what was maybe the one section or the one number on your tax return that maybe opened your eyes once you learned how to read it?
Well, I'll tell you, for me, Russ, this is the number one no-brainer. You don't have to do anything to actually qualify for this, but it is on your return, and most people don't even know to look for it. We're talking about the QBI, the Qualified Business Income Deduction, which is on line 13. So if you're running on the treadmill or you're driving right now, don't pull out your return just yet. But as soon as you get to a stable position, do so. Look at line 13 and see what that number is. That number should be roughly 20% of your qualified business income. If it's not near that number, it's at least a yellow flag and potentially a red flag. You highlight that thing, bring it to your tax professional, and ask them to explain why it's not. There could be reasons. And again, we're not tax professionals, but just when we went through the intensive and looked at that, it was like, wait a minute, why is it that? And it was at least fueled the conversation to be able to get to the bottom line.
Anthony, shouldn't we be looking at, is it line 8 to determine what that income number is that would then be 20%, which is line 13? Is that correct?
Russ, I'd have to say, if you look down here, I'm a recovering CPA. Okay. I understand the big picture, the minutia, tax return line items have changed, and I haven't been staying.
Tribe, let this be noted that Russ knows more about taxes in this very instant than Anthony Passo. Okay, just for the record, and maybe just because I was just looking at the 1040 to know that was where I was supposed to get that number from. All right, Anthony, though, what's one commonly misunderstood line on the tax return that maybe impacts passive income?
I would say this is a form probably people have never even heard of. It's form 8582. And that is your passive income loss limitations. Because there's a lot of clients that, they listen to these podcasts and they hear the tax advantages of real estate and maybe some of these investments, but they don't realize that if we have a passive loss, we cannot necessarily just directly deduct that against your active income or your W-2 income. So, and those, if you have passive losses, you're not going to lose them, but if you can't use them that year, you're going to roll them forward to the next year and the next year and the next year until you can. But as Joey had reiterated, the taxes are one of the biggest expenses you're going to have, and we want to make sure that we pay the smallest amount per year. But so if we have these passive loss limits, then we need to find some ways to create some passive income or maybe rearrange some of our entities.
Here's one of the things that I've said this a few times, but if you're listening to our show for the very first time and you're trying to figure out how do you become financially free, it is like taking control of your finances. And I want to give you permission right now to go to wealthwithoutwallstreet.com/PIOS. We actually break down in a 40-minute video this process of turning active income into passive income. And on that architecture, you're going to see where taxes come in, right? Like, how do we keep more of the money? If we keep more of the money, means we can save more, then we can invest more, we can build more passive income, right? That's going to accelerate us to the financial freedom mark, which we're looking for. And one of the areas as I was going through this for myself for the very first time is that I noticed that there was this item that was called investment interest expense carryover. And I had no idea what that was, but the tax intensive we went through basically showed me that there's every time I borrow money against my life insurance contracts to go out and buy assets to produce passive income, I can write off some of that interest against some of that investment interest income. Now you've probably, did something in your business where you took a loan, right? And you were able to write off the interest expense on that loan, right, against the income that your business was making. Same exact concept. Well, I was just gathering all of these interest statements from the insurance companies I'm working with and just handing them like a big wad of, receipts to my accountant with everything else. And just assume like, well, okay, it was my job to get the numbers, your job to write them off against income. And what I found is that this, $150,000 carryover had not been written off. And I didn't understand why. It was because my accountant didn't know what to do with it. I hadn't told them all the investments I had made so that then they could match up those deductions, if you will, against the income. So it's important that that you can read your return, that you could be able to catch something like that. But then the second part of this is that you have to be able to sit down and have that conversation with your CPA. Otherwise, they won't know. And so, and as a result, it won't be written off. All right, I want to keep going here.
Russ, can I add 2 points to what you said? I think this is one of the many advantages of using this passive income operating system, where we can literally create tax deductions. Most of the time, everything's a plus and a minus. If I have a business, and I pay you a service, I deduct it, and then you claim it as income. It's kind of like a wash. It's always like a plus and a minus, or even we put money. But what I would say, when we utilize the passive income operating system, this is really the one of the true one-sided and in our favor for once, leveraging the tax system, where you have the growth inside your hub growing tax-free. But when you leverage against it, we're actually creating tax deductions. So that's one. But two, one thing that I think would be helpful for when they're looking at the tax return, because you look at it, I mean, there's a lot of pages and a lot of numbers. Typically, your CPA is going to give you a tax summary on there, and it's typically going to give you your carryovers. So, Russ, if you would have been looking at that, you would have saw you had 50 grand carryover. And if you had some passive loss carryovers or some capital gain loss carries over, you can see that on one sheet. So that one sheet can provide you a lot of information.
There was nothing worse than walking into class when you're in school and the teacher saying, "Pop quiz day." Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
Thanks for pouring salt in the wound there, bro.
My pleasure.
Where were you a couple years back? I got that now. I don't need that. I know how to look for it. But thank you. That's a good hack for everyone else. Stallion, you may want to check up on that. We've already identified that you're not a CPA, Stallion, even though you used to wear your phone on your hip like a little holster. But
I thought he still did.
How do you use the tax return as a planning tool?
Well, first of all, I want to make one quick note here. You mentioned this intensive as a means to how you were educated on this. And if people don't know if they can qualify to attend one, I want to give you the kind of the formula. Go to wealthwithoutwallstreet.com/tax and see if you qualify, because that is a great step to do this. The second thing I'll mention before we get into this planning tool is one of the things that I learned by going through this intensive is, and it makes perfect sense, but I think we assume that our tax professionals know the story that goes with the numbers. And that was one of the biggest things that they pointed out to us is they said, you're assuming too much that your accountant knows how to report according to what's actually going on in your life. And as an entrepreneur, you always have things changing and moving, and your accountant is not in the loop. I'm just telling you. So have those educated conversations to be able to say, hey, this is what changed from last year. To Anthony's point, looking at the summary from year to year, what's changed, and making sure that what is being reported actually lines up. The other part of using this return as a planning tool, I'm going to give you a very simple list. There's a much longer list than this that you will learn either by digging into this personally or attending an intensive. But print your return and highlight at least 3 lines that you can immediately do. Line 8, make sure your income is actually accurate, right? You know roughly because you put it in the bank. You know how much you kind of got paid. And if it doesn't look right, highlight it. Number 13, line 13, the QBI deduction. Again, we mentioned it before. Is it 20% of that line 8 number? Highlight it. Line 23, our family office talked about this being the learning box. This could reveal some different self-employment tax complications and things that you could avoid with the proper planning. One simple thing about that is, are you actually listed as an S corporation or not? Because there could be some definite opportunities to get that money back, or just properly putting the right types of income under the right types of entities. So those are 3 simple ones. But man, you combine accountability with reviewing your return. All of a sudden, now you have a very clear path to planning for the future.
Yeah, I mean, it's definitely just like thinking of it like a playbook. You're just reviewing not only the score, right, which is how much we're paying, but what we're able to do is start reviewing the plays. Like what are on the, what are those items on that tax return, that 1040 that you were talking about, and then all those schedules that go with it. And the beautiful thing is that when you actually take time to go through the tax return, it will point you to, oh, this number that's listed on this line item is subject to this specific schedule. And then you can scroll to that schedule and see what's on it. And sometimes it will reference to another schedule. It's pretty easy. I think it's intimidating for the very first time. But as we talk about how much money we could save, it will be definitely worth your time. All right, Anthony, what's one step someone listening right now can take this week to treat their tax return more like a freedom plan, not just some sort of filing task?
Well, I'm going to go back to my first response is we need to demand to meet with our CPA and get don't ask compliance questions, ask more strategy questions and learn the tax return. And I know when it can seem overwhelming when Joey's talking these numbers and these tax forms, but I would tell you, a wise man once told me this would be hard once. Once you do it, it is going to be hard the first time. But as Joey said, this is your biggest expense ever. Don't you think it'd be worth some of your time to go through and learn how to minimize your biggest expense? Imagine if we were to save money. You're already spending it, but we save money. Isn't that going to help us get closer to financial freedom? More money that we could use to either lower our monthly expenses or to increase our passive income.
Anthony, one of the last times you were on here, you were talking about Dan Martell's book, Buy Back Your Time, right? And he was saying anytime that you're going to spend doing anything, it needs to be worth more than what your average daily rate is, right? Or your average hourly rate. Tell me again, how many hours were we supposed to so if I made $500,000, I wanted to figure out what my typical hourly rate is. What number would I divide it by?
I'd say make it easy. I would use 2,000.
2,000. All right. So if I had 500,000, I divide that by 2,000, Stallion. I think the quick and simple math on that's about $250 an hour.
Yep.
So you want to determine, is it worth my time? I make a lot of money, and $500,000 for most people is a lot of money. Is it worth my time? Well, let's just assume it took you 5 hours. Like you said, it was hard, right? Like it shouldn't take you 5 hours to go through your tax return, but let's just assume it took you 5 hours to go through your tax return. Then that means that it costs you $1,250 of your time. Well, if you're in a 39.5% tax bracket, Stallion, do you know how much money that the only amount of money you need to find in order to get that $1,250 back?
I'm guessing somewhere around $3,200.
$3,200 to break even. So if I can find 5,000, 10,000, in the example that I shared with you a second ago, where I found $150,000 worth of write-off, do you think that was worth my hourly rate?
Just
So
slightly. Yeah.
So this is the why is this important for you? Like we don't bring things to you like to find ways to step over dollars to pick up pennies. No, we're talking about real dollars and why it's so valuable. Because if your goal is to become financially free as fast as possible, then things like this is going to move the needle. All right, Sally, as we start wrapping up, what's some final takeaways you have for our listeners?
Well, just before we get to that, I just want to point this out. In any intensive that you've been in so far, on average, how much are people finding in those errors that should have been found years ago, potentially with their tax returns?
Well, I would say this is that the the interesting part to me is that our family office manages roughly 100 clients. And so they look at every single return for all 100 clients. And they told me for the year 2024, they amended or corrected 100% of every return that was sent to them. That's shocking. Like
Yeah.
100%. And this is not like, oh, well, there's just a bunch of bad CPAs out there. Well, maybe there are some, but they were like, no, most of these CPAs are CPAs that we actually refer clients to. So what you were talking about earlier, Stallion, there's lack of communication that happens that the accountants, they don't know. They can only take the data that you're giving them. So if you're not looking at it, you got to have someone like in our situation, we can have a family office. We're paying them to be that COO in our finances to help us have second eyes. But even we have to sit down with them and have some conversation.
That's right.
But this is a super important thing. I'm glad you brought that up.
Yeah. So I would just say, as far as takeaways, number one, we've mentioned it before, but commit today to change your mindset. Like you are the CEO of your tax return. We talk a lot about on this show being the owner of your finances, take control of your finances. Well, this is just one other component of that. So that's number one. Number two, get educated. Use the tax intensives that we use, wealth.wallstreet.com/tax. See if you qualify. If you don't, then you have other options. Get some other free online guides. There's tons of stuff on there. Once you commit to being the CEO of your tax return, now you know what you have to go and learn, and you can find tons and tons of resources online. And I'd say the third is just start with the simple lines that we've already pointed out, 8, 13, and 23. Highlight those and go set an appointment with your accountant and see where that leads to. You may be surprised at what you're leaving on the table.
Anthony, for the person listening, what sort of income and what sort of occupation or maybe employment status makes sense for someone to go down this road versus what time doesn't? Because we don't want people wasting time if it's not going to be a fit.
I would say if there's a big difference between if most of your income is from a W-2 or if you have some businesses. If you're a W-2 employee, for the most part, it is what it is. There's not a lot of strategies that we can do. So what I would suggest, instead of taking that time going through your tax return, take that time and check out the webinar on the passive income operating system. Try to take that time, find ways to start creating some passive income. Now, if you are an entrepreneur, to me, where it really starts to make sense is really if you're single, maybe your income is 50 or more, or and if you're married, 100 or more. That's where the value that you're going to find from taking those deductions. But one thing I think I'm hoping to convey here is we can't just rely that our CPA has all the information and knows exactly what to do. I mean, Russ, very interesting how you mentioned these high quality CPAs still get had to amend returns. I would say most of the burden is probably not on the CPA. He or she is just doing what they're given. You need to be the CEO of your tax, and you need to be active in meeting with the CPA. And active doesn't mean meeting with them right before the tax deadline, right? When the later we meet with the CPA, the lower the options are to really do anything. And most CPAs, most CPAs are evaluated on how much money am I getting back this year?
Mm.
With that in mind, what's a CPA going to do? Try to minimize your tax return for that year. And one of the tools that I always have in my back pocket is like, oh, you're going to owe all this money to the IRS? Well, if you just take this huge lump sum and we lock it up into an IRA or 401k, you're going to get a tax deduction today. And then you're going to tell all your friends how good I am because I just lowered your taxes. What your friends aren't going to see is what's going to happen 20 years from now when we just created a huge tax bill. And in the meantime, all of that money was trapped and we couldn't use it to create passive income to exceed our monthly expenses.
No, that's a great point. And bringing it all together, right? That's why we, every single time we focus on this passive income operating system, because there are components to turning active income into passive income. There are steps to becoming financially free, and you can't skip steps. And unfortunately, there's no hacks. And so people that will, like you said, as a way to avoid or evade taxes at that point, hopefully not evade, but they make a bad decision and they trap money. And we realize that most people are not financially free because of what major obstacle, Joey?
They don't have access to cash.
Yeah. They don't have income problems. They have access to cash problems. So when they stuff it in one of these qualified plans, now they've put their money in prison without keys for 20, 30 years. And the formula to financial freedom is when passive income exceeds monthly expenses. And then he's sure tells you so. So learning the tax code, learning how to be a CEO of this and applying it into your situation is what we're hopefully helping you do. If you found value today, take a screenshot wherever you're watching this, listen to this at, and just reply. And just that way we know that this was valuable content. We'll create more just like it. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.